Hey guys, welcome back to another video, and today we're going to be talking about Nbev, or New Age Beverage. And I kind of wanted to discuss where I think this stock might be headed over the next couple months and the potential targets we could see. So ever since October 2018, this stock has been absolutely hammered. It's just dropped and dropped and dropped, and there really hasn't been any floor. And I'm going to break down why I actually think this is a decent entry into the stock for a short-term position or potentially even a long-term position. On a short-term basis, we have this cup and handle setup right here. It doesn't really look like a cup and handle on the daily, but if you switch to the weekly, you can see it pretty clearly. It's a pretty clear cup, and then it's building out the handle right here. So usually when a handle is built out, it's going to come right into this 38.2 to 50% retracement. So right now that sits between about $2 and $2.20. Oftentimes on these long-term Fibonacci levels, the price will break below that level for a few days, consolidate below it, and then break back above, and then see a push higher or a drop lower. So in this case, we have this 50% retracement at 198. I think you can pretty much buy here and long anything versus this 198 level. It's also in line with this gap demand we have right here, so if we fall below this level right here, we should technically fill this gap and then head lower, or at least backtest this trend line that we have. But I do think you can buy against this gap demand right here, and we actually see a push higher before ever filling this gap. Oftentimes gaps do get filled, but at the same time they do work as demand zones. A break back below that level should fill the gap relatively quickly. So I think you could potentially long the stock on a short-term basis or even a long-term basis here at about 215, and then you can put your risk versus this 198 area. I think this offers a great trade. You're risking about 20 cents. And I think the potential targets we could see is this 138.2 and 161.8% extension that sits between $3.60 and $4. I think there's a really great chance we see this. So you're risking about 20 cents for $2. It's a pretty great risk reward. If I was to take a position here, I would probably trim half into this 138.2% extension at 359, and then I would probably ride the rest to this $4 area at this 161.8% extension. On the long-term basis, I actually believe this stock is a long-term buy here because, well, on a long-term basis, we actually broke below this long-term pivot we had back here. And before the price actually bottomed out here, we broke below this pivot and we ran stops below this pivot. So now I do believe there is a psychological floor beneath because we broke below this level back here. There was psychological reasons to break below this level, and there's psychological reasons to now hold back above it. So if you're looking to take a long-term position here, well, you could take a long-term position here and you could put your stop versus 130. And by long-term position, I mean like a few years out as an investment. I think now would be a great time to potentially get in. So you could take a position here at 215. On a short-term basis, you could still stop below 2.0, and then you could look to buy around this trend line here. But on a long-term basis, you can long pretty much anything above this previous breakdown pivot here. So I think this is a great not only long opportunity, I think it's also a great short-term opportunity as a short-term trade for this $4 area. I think we see that relatively quickly. And as a long-term position, I think you can just put your risk versus this previous pivot we had back here since we've broken back above it. You can now enter a long-term position, and we could potentially even see new highs here. So yeah, that's kind of how I view this stock. I think right now you have a great entry to get in it. On a short-term basis, you can put your stop versus this 198 level, and if you're looking to get in the stock for the long term, you can still put your stop versus this 198 level, and you could just look to rebuy when we retest this trend line at around 160, and then you can put your stop versus 130, risking about 30 cents as a long-term position. I think both of these are great ways to go around trading the stock. I personally don't think this gap gets filled. I think there's a level of demand below, and this gap won't get filled at least until we hit $4 a share first. I think there's a good chance we see that level first before that gap ever gets filled. So yeah, that's kind of my views on Nbev here. I think you have a great entry to get in a long-term position. You have a beautiful cup and handle setup, and I think the stock can go as high as $4. If you're looking for more confirmation in your trade, you could also go about doing this. You could wait until the stock actually breaks out, and then you could put your stop below these highs right here, and then you could just ride it to these extensions. That way your only risk would be if we see a fake breakout. Either way, you could trade this any of those ways. All of those offer great risk-reward opportunities. On a short-term basis, I'm going to personally want to take a position here, and I'm going to put my stop below this $2 level. I think that's a great trade, personally. And I think there's a very great chance we see this 161.8% extension. You've got about a 1 to 10 risk-reward in the trade, so you've got a great risk-reward in the trade. And yeah, that's kind of my views on this stock and where I think it might be headed. And if this video helped you out in some sort of way, make sure you subscribe and leave a like. Thank you.